guys, it's Doc's Market Minute for Thursday, April 30th. And as we bring the month of April to a close, let's take a look at the major indices and see if anything started to trigger with yesterday's poor news. So let me start with the Dow. And looking at the Dow, obviously we haven't broken trend at all in the monthly chart. That's still okay. Nothing wrong there. Let's look at the weekly chart and see if we've broken any trends. So far, this trend line is still intact. And so far, we have not even so much as put in a lower low and lower high on the daily chart. So yes, the Dow is off by about 0.5% right now. So this is just very, very mild. This is not a big deal. Looking at the Dow. Now let's look at the transports, which are the other half of the Dow theory equation. The only issue that I'm concerned about here is this could become a potential lower high setting up here. And if it makes a lower low on the weekly chart, then we do have a change in polarity definitely to a weekly downtrend, and that's going to really start to pull down this monthly chart. And we could find ourselves on the transports with a 10% correction before long. It's really not that much further down in price before we hit that 10% marker. So the transports have definitely been weak since we've gotten into the new year and might be leading markets lower right now. Here's the NASDAQ composite. The NASDAQ composite also is really not seeing anything that's earth-shattering at this point. We still have not broken trend on this extremely high rising wedge. So no problems with trend on the monthly, on the weekly charts. The daily chart, this is just so far just a pullback, so far making a higher low. So again, no cause for alarm on the NASDAQ. Now where we have the problems is in the next chart, and this is kind of a surprise for me because I had figured that with the stronger dollar, the Russell 2000 small caps would be going berserk, especially if they're not going to be raising rates anytime soon. But what I have seen here, this is the first piece of trouble that we see on the charts, is with this chart making higher highs and higher lows. We made a lower high and then very quickly over the last 2 days made a lower low. We do have a change in polarity on the daily chart. So the daily chart right now is technically in a downtrend. What this is doing is pulling down the weekly chart. Now, no harm, no foul so far, just because it pulls down. So a lot of us get so focused on the daily chart, we lose sight of the bigger picture of what's going on in the rest of the time frames. And the larger time frames are still in control. We don't see any hint of a downtrend yet on the monthly or even the weekly chart. But here is where we have to be careful, because if on the next bounce back up, if the weekly chart of the Russell creates that lower high, then we're going to see the next bout of selling be very, very strong. And this will lead the market lower if the Russell is having a lot of problems. You can use the Russell kind of as a canary in the coal mine for fund manager sentiment, because these are the most illiquid stocks that they hold right now. I mean, if they sell 1 million shares in an underlying, they're going to end up moving the price significantly. Whereas if that's what they did on IBM or GE, 1 million shares isn't really going to move the price all that much. So this is an early warning. It's not necessarily a declaration of war against the market. This is just an early warning to saying that it looks like fund managers are lightening up. Now, if the next bounce up, they lighten up significantly from there and create that lower high, then we have really something to hang our hat on, that we're gonna see some distribution this summer if that happens. Again, no big deal so far, but definitely a daily downtrend. And what we have to watch out for here is a lower high setting up on the weekly chart. That could be trouble. So that's the Russell, and then getting finally to the S&P 500 here. Like most of the other indices that we follow, no harm, no foul. All of this is just simply another weekday. We have a slight pullback on the daily chart off of the all-time highs. Trend has not been violated yet. But if this continues to drift lower like this, then we're going to see a lower low, which means that the next high is probably going to be a lower high. And then we'll likely see this trend line broken. If we see this trend line broken, then we would also look to see for the next high to be a lower high and then perhaps a lower low after that. So again, these things tend to fall like dominoes, right? It starts at the smaller time frames, and these reversals propagate from smaller time frames to larger time frames. So as long as we understand how this puzzle is all put together, we can stay on top of this and know whether or not this is something that we need to be concerned about and prepare ourselves for distribution, or whether this is going to be just another dip that ends up getting bought. And that's it for Doc's Market Minute. Thanks for listening, folks. We'll see you tomorrow.